Coming up on the SBS On The Money podcast, fertility rates fall to a record low. What does it mean for the economy? The Australian share market rallies, and we take a closer look at international markets. All of that and more next. Hi everyone, welcome to the SBS On The Money podcast for this Wednesday, the 15th of October 2025. It's a day where the Australian share market rallied up by 1%. We'll have the details with Luke Laretive from Seneca Financial Solutions in a few moments, including what he's telling his clients. But first, the shift toward older parenthood continues in Australia, with the median age of a mother rising to 32 years and nearly 34 years for a father. The Bureau of Statistics says it reflects broader social changes and economic shifts, like more time spent in tertiary education and more women in work. It's also, though, contributing to a slide in Australia's fertility rate. For more on what it means for Australia's economy, I spoke with Ashley Fell, a social researcher at McCrindle. Ashley, so the fertility rate is at a record low of 1.481 babies per woman. It's below the replacement rate of about 2.1% since 1976. What does this mean for society and for the economy?
Well, fertility rates directly impact the age structure of a population. And so a sustained low birth rate like we have here in Australia does lead to an ageing population, shrinking workforce, and increased pressure on government services like healthcare and aged care. And so this population imbalance can also lead to labour shortages, slower economic growth, and a heavier financial burden on younger generations who are also already feeling that financial burden, I think. And so in the long term, it can challenge everything from housing and education planning to infrastructure development and even intergenerational equity.
So how do you fix it? How do you get it higher? And I guess the other thing here is what kind of a role migration plays.
Yeah, that's right. Well, migration does help to alleviate this sort of lower population pyramid that we experience when we do have a lower fertility rate. So migration plays a big role and has been for a number of decades here in Australia. And I think many of us think the baby bonus, let's reintroduce that, and that can play a role. But I think we also need a broader strategy around this, including, let's say, subsidised or free childcare to reduce the cost burden on working parents, extended parental leave that supports both parents in balancing work and family. Of course, tax incentives and housing support can play a role, and even workplace flexibility where we might encourage part-time roles or remote work to help working parents make parenting more manageable alongside those career goals we know that many young people have today, as well as to combat the economic challenges that many prospective parents are actually feeling the need to sort of combat or overcome before they start to have children.
And the other interesting stat to come out today, as you mentioned, parents are also getting older. Why do you think that is? And what are the society impacts?
Yeah, we've definitely seen over the last few years that younger generations in those key family forming life stages are delaying those life milestones like getting married and having children, with many choosing to focus on education, travel, career development, and financial security first. And so what this means is that many young people are studying longer and entering the workforce later, and often with a huge, substantial student debt. Then you combat that with rising living costs, particularly housing affordability challenges in our major cities. That's also making it difficult for younger Australians to feel financially ready to start a family. And for many people, they want to be financially ready before they take on that extra sort of responsibility of having children. And so as societal trends like as well as later life partnering play a role and a greater focus on individual aspirations, that is impacting the age at which people are having their first child, and also even climate and economic uncertainty. These are all things that are contributing to people delaying that decision to have children. And as a result, in society, we are seeing fewer children being born per woman and impacting our age structure and all those other ways that an aging population does impact a society.
That is social researcher from McCrindle, Ashley Fell there. Now to the Australian share market, which rose today, especially toward the end of the session. The S&P ASX 200 up 1% to 8,990 points. 10 of 11 sectors ended higher. The best, healthcare, followed by materials. And a closer look at the best and worst performing stocks. Telex Pharmaceuticals, one of the best, up by around about 16%. Drone Shield, the worst, off 9.5%. For more on the day's market action, I spoke with Luke Laretive from Seneca Financial Solutions.
It's really the healthcare sector that's kind of the primary driver. CSL's up 2.4% and Telex up 15% on an earnings upgrade after market on yesterday's close. Banks are also stronger. Probably Westpac, the best of the big four, up about 1.65%.
Can we talk interest rates? We heard from the RBA's Assistant Governor, Sarah Hunter, today, warning that it is expecting stronger inflation ahead of its next board meeting. So to what extent does the market think that further rate cuts here will be delayed, or even that the rate cutting cycle may have ended?
Yeah, I don't think the cycle's ended. I just think the rhetoric's maybe less aggressive about imminent rate cuts. And the bank's been pretty consistent with this sort of, data dependency, wait and see approach. And nothing kind of that was said today has really deviated too far from that. I think the reiteration of the points around, the declining productivity growth, and sort of the structural challenges facing our kind of domestic economy, they're probably the two most relevant and important takeaways for investors and the general public kind of more broadly. We have seen bond yields move lower over the past few sessions. Australian government bond yields kind of fallen from 3.78% to 3.65%. But that's fairly consistent with what's happening in major developed markets around the world, where this sort of softer economic data and an uptick in the kind of tariff-related uncertainty probably has driven up the appeal of these sort of safe haven type assets.
Okay, so that's local issues. What about international factors? Gold continues to hit record highs. The US relationship with China continues to be quite volatile. There are bets the US Fed may still cut rates twice this year. What's your take on how the international environment is like for investors at the moment?
Yeah, I mean, gold's certainly been a key driver of returns for us over the last 12 months. And I think, rising commodity prices, the underperformance of the US stock market, and it's all kind of pointing to this sort of same issue. And that's really a rotation of capital out of these kind of US and USD denominated assets and really into real assets and the stuff that's not denominated in US dollars, essentially. I think that shift away from the US is likely to continue, probably for sort of three sort of main reasons. There's a significant relative value and good opportunities, I suppose, in emerging markets and developing markets relative to the US, which has been on a kind of a huge run over the last few years. I think the US, sort of politically is kicking a few own goals, kind of hampering growth, spiking inflation, and kind of perpetuating inequality really across their country. And that's not really a recipe for anything other than stagflation. And I think probably as a result of those sort of policies, we've seen a decline in the US dollar. And that's a drag on foreign investors buying, US based stocks. And that's kind of encouraging them to allocate allocate capital elsewhere, to more stable, appreciating currencies.
Here, a lot has been said of the banks and a switch away from financials into resources recently. Yet you then get figures today from the likes of the Bank of Queensland, which raised its dividend and reported a 12% lift in full year cash profit. What's your take?
Yeah, nice result from BOQ, no doubt about it. And I don't think any of the banks are doing too badly from a sort of operational perspective. The problem for me has really been valuation over the last few months, and particularly with CBA, which was trading at a 3 times standard deviation premium. But that's kind of been corrected in the last couple of months. CBA is down 7%, and ANZ, for example, is up 20%. So pretty significant underperformance there from CBA. And I think it's probably starting to speak to a trend that we're starting to see and kind of want to play on the ASX, and that is this rotation into sort of metals and mining, which is up sort of 30% year to date. And I think the banks are kind of flat over the same period. So yeah, definitely a rotation into these metals and mining's names.
And finally, what are you telling your clients right now? Where do you see the opportunities for investors?
Look, this rotation into resources is set to continue. I think it's largely been focused around gold and these counter-cyclical precious metals to date. We think the next leg is more pro-cyclical and into the likes of, iron ore, coal, copper, bauxite. And there's companies that are exposed to that on our market here, kind of operating in good jurisdictions with good assets. So names like South32, AIC Mines, and Red Hill Minerals have made their way into our portfolio.
It's Luke Laretive there, the founder of Seneca Financial Solutions. He wraps up the podcast for this Wednesday. Don't forget, if you enjoy it, to give it a rating or review on Apple Podcasts and Spotify. Click subscribe. Tomorrow in focus, the latest jobs data. Love all the details then. See ya. This SBS on the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.